Welcome to the Deep Dive. Today, we're taking a close look at Motilal Oswal Financial Services Limited, MOFSL, specifically their performance for the fiscal year ending March 31st, 2025.
That's right. We've got their official filings, the investor presentations, basically the raw materials to really understand what happened.
And our mission today really is to cut through the noise. We want to pull out the key figures, the crucial insights, give you a clear picture of how MOFSL did, what's driving them, and maybe where they're headed.
Exactly. Without getting totally bogged down in, hundreds of pages of detail, we're looking at filings with the BSE and NSE, those investor decks, and the audited results, both consolidated and standalone.
Okay, let's jump right in. The big picture first. How did MOFSL actually do overall in fiscal year 25?
Well, the headline number everyone's looking at is the consolidated operating profit after tax, or PT. It hit 2016 crores.
2,000 crores. That sounds like a significant number for them.
Oh, absolutely. A major milestone. And when we say crores, just as a reminder, that's tens of millions of rupees, a standard unit in Indian finance.
Right. And compared to the year before, how was the growth?
Really strong. It was up 31% year on year. That's the consolidated operating PP growth. They highlighted this themselves, and yeah, it's impressive.
And wasn't this a record for them, hitting that 2,000 crore mark?
It was their highest ever annual operating PP, a big psychological level to cross, I imagine.
Definitely. And beyond the operating PT, what about total revenues and the overall bottom line?
Also looking good. Total net revenues came in at 5,161 crore. That's also up 31% compared to last year. And the total PT, which includes other comprehensive income, was 2,494 crore.
Okay, so solid growth pretty much everywhere you look on the summary level. Now, MOFSL often mentioned their double engine model. Can you break that down for us? What does that actually mean?
Yeah, it's kind of their core concept. The double engine model refers to their two main business pillars. First engine, the operating businesses. This is, all the financial services they offer clients.
Right. And the second engine?
That's their treasury investments, basically where MOFSL invests its own capital.
Got it. And under operating businesses, what specifically falls into that category? It sounds quite broad.
It is quite diverse. You've got wealth management serving individual investors. Then there's capital markets, that's institutional equities and investment banking, dealing with bigger institutions.
Okay.
Then asset and private wealth management. That includes their mutual funds, the AMC, plus private equity, real estate investments, PERE, and also services for high net worth clients, PWM.
Got one more.
And finally, their home finance business. So providing housing loans, it's quite a spread.
Definitely covers a lot of ground. So how have these two engines, the operations and the treasury, performed, say, over the longer term?
Well, both have shown really strong compounding growth, actually. The treasury side has posted a 42% CKGR since they started tracking it that way.
42% CKDR. Wow. And just quickly, CKGR is compound annual growth rate, right? Like the average yearly growth over time.
Exactly. It smooths out the bumps and shows the underlying trend. And the operating PT from the businesses, that's also clocked a very healthy 31% CAGR over the last 10 years.
So both engines firing pretty well over the long haul. That really underpins their strategy, I suppose.
It seems to. It shows the model's resilience and growth potential.
Okay, this is where it gets interesting. Let's dig into the segments. How did each one perform in FY25 specifically? Maybe start with wealth management. That seems key.
Absolutely key. Wealth management brought in an operating PAT of 783 crores for the year.
783 crores. And the growth there.
It showed a 28% increase year on year. And if you look longer term, that segment's KT has grown at a 32% CAGR. So consistent performance.
And they make some pretty big claims about their market position here, don't they?
They do. They state they're the #1 full-service broking house by gross brokerage revenue, and they also claim the highest broking ARPU, that's average revenue per user.
Which suggests they're good at generating income from each client.
Precisely. It's not just about having lots of clients, but profitable ones.
And their reach. How do they manage that?
It's a mix. They have over 1,800 of their own relationship managers, but also a very large network, over 9,100 external wealth managers. It's a hybrid approach.
Plus, that geographic spread you mentioned earlier. Clients in 98% of PIN codes.
Yeah, that number is quite something. It really speaks to their nationwide presence, almost total coverage.
Incredible. And are they building more predictable income streams in wealth management?
That's a definite focus. The share of recurring revenue jumped to 59% in FY25. That's up from 48% just in the last quarter of FY24.
That's a significant shift towards stability.
It is. Less reliance on transactional income, more on fees from assets, etc. And speaking of assets, their AUM in wealth management grew to 2.65 lakh crores.
Lakh crores. Another big number there. Okay, let's move to capital markets. That's the institutional equities and investment banking side. How did that segment fare?
Also a strong year. Operating PT came in at 258 crores. That's up 31% year on year, and the long-term CAGR is even higher at 43%.
And investment banking, were they busy closing deals?
Very busy, it seems. They completed 39 deals in the fiscal year, with the total issue size over 51,000 crores.
That's a lot of activity.
It is. And significantly, they ranked #1 in the QIP League table for FY25.
QIP being qualified institutional placement, raising money for companies from big investors.
Exactly. So being #1 there is a big deal, shows their strength in that space.
Okay, good stuff. Now, asset and private wealth management. This sounds like another powerhouse segment for them.
Definitely. Operating PT here was 824 crores in FY25. That's a 36% jump year on year and a 26% CAGR long term.
And what's the model here? They both create and sell products.
Right. They have the manufacturing side, creating mutual funds, private equity funds, etc., and the distribution side. They position themselves as a leader in alternate assets too, like PE and real estate.
Which is a growing area of interest for investors.
It certainly is. Their total AUM in this whole asset and private wealth segment reached 2.8 lakh crores, and net sales were over at 65,000 crores in FY25.
Wow. And its contribution to the overall group profit.
It's huge. Over 40% of the total group PT comes from this segment alone.
Okay, let's break that down a bit. The asset management company, the AMC part, how are the mutual funds doing?
Very well. Mutual fund AUM grew incredibly fast, 95% year on year. It reached 95,111 crores.
95% growth.
Yeah, massive growth. And importantly, they also gain a market share in terms of net fund flows. More money coming in than going out relative to competitors.
That's a positive sign for sure.
Awesome.
And the private equity and real estate side.
They're actively raising funds. They have a target to raise 7,500 crores for their fifth India Business Excellence Fund, IBEFV. So continued focus there.
And private wealth management, catering to the very wealthy.
Yes, the UHNI's ultra high net worth individuals, that's growing too. Client AUM there is now 1.4 lakh crores.
Okay, switching gears now to home finance. How's that business looking?
Home finance reported an operating PT of 127 crores. The long-term CAGR is strong at 33%. But interestingly, the year-on-year growth was actually slightly down by 2%.
Oh, a slight dip. Why was that?
They attributed it to investments they're making in capacity building, expanding the team, scaling the model, things that cost money now but are expected to pay off later.
So investing for future growth, basically.
That seems to be the narrative. They point to their growing RM strength and a scalable operating model. And importantly, the loan book quality looks excellent.
How so?
Their gross non-performing assets, GNPA, was just more 0.8%, and net NPAs, NNPA, even lower at 0.4% as of March 2025. Very low levels of bad loans.
That's certainly reassuring for a lending business. Okay, last piece of the business puzzle. Treasury investments, the other engine.
Right. The Treasury investments generated a P8, including other comprehensive income, of 478 crores.
And the returns?
Pretty healthy. They report a 17.9% XIRR since fiscal year 2014. XIRR is just a way to calculate return on investments made at different points in time.
And the promoters have skin in the game here too, right?
Very much so. Over 10,000 crores is sponsor and promoter capital invested alongside the Treasury book. Shows alignment and confidence.
Okay, so that covers the performance breakdown. Beyond the numbers, what about key strategic moves or decisions MOFSL made during this period?
There were quite a few, actually. One big one is the board approving the issuance of non-convertible debentures, NCDs, up to 30,000 crores.
30,000 crores. That's a massive potential fundraise. What might they use that for?
That's the big question, isn't it? Could be for expanding lending books, strengthening capital, maybe acquisitions. They haven't specified the exact use yet, but it signals potential ambition. They can issue it via public issue or private placement in tranches.
Interesting. What else on the strategic front?
Let's see. They appointed new secretarial auditors, Mrs. Makarand M. Joshi & Co., for a 5-year term starting FY26, pending shareholder approval, of course. Standard governance stuff.
And leadership. Any changes there?
Continuity at the top. Mr. Motilal Oswal was reappointed as MD and CEO for another 5 years, starting January 2026. He co-founded the firm back in '87, so Huge experience there.
A steady hand at the helm. Any new key hires?
Yes, they brought in Mr. Sanchit Suneja as Group Chief Strategy Officer in April 2025. That appointment suggests a real focus on plotting the future course.
Right. Now, what about that restructuring plan they had? I heard something about that being withdrawn.
You heard right. They pulled back on the proposed scheme of arrangement. The reason cited was a consultation paper from regulators about potential changes to rules concerning broker investments in group companies.
So regulatory uncertainty put it on pause.
Seems like it. They basically said they'll wait and see what the final rules look like and then reconsider if needed. A prudent move, probably.
Makes sense.
Yeah.
The other updates? Debt security? Shares?
Yep, they confirmed all their secured NCDs were fully backed by assets as required at the end of March 2025. They also did a bonus issue, 3 bonus shares for every one held back in June 2024. And they've been allotting shares under their employee stock option plans, ESOPs.
Okay, good overview of the strategic side. Let's quickly touch on their overall financial health. Key metrics.
Net worth is a big one. That stood at 11,079 crores as of March 2025. That's up 27% year on year, so a healthy increase in their core capital base.
And debt levels. Debt to equity.
The specific ratio wasn't easily pulled from the materials we reviewed, but we know they utilize debt, especially with the NCD plans. It's something to watch.
Got it. But their scale in terms of client assets and numbers, that was striking.
Absolutely massive. Assets under advice, or AUA, that's everything they advise on, not just managed directly cross the $4 trillion mark.
5 trillion.
And their total client base surged past 12 million. That's an 83% increase year on year. Just huge growth and reach.
That client growth is staggering. It really puts their market penetration into perspective. So looking forward now, what kind of environment are they operating in? And how are they positioning themselves?
Well, they see a lot of positive tailwinds. Things like the general growth opportunity in wealth management in India, the fact that India is a fast-growing economy.
Right, the macro story.
Exactly. Plus, the financialization of savings trend, more Indians shifting from physical assets like gold or property to financial assets like stocks and mutual funds. And, of course, digitization making it easier for retail investors to participate.
And MOFSL seems to be leaning heavily into that digital trend.
Oh, definitely. They talk a lot about their digital infrastructure, things like their RISE super app for clients, the Research 360 platform, MO First for their external partners, even using AI in their research, and tech is clearly a big part of their strategy.
Are they looking at ESG factors too? Environmental, social, governance?
They are. They mention their ESG initiatives and point to an adequate rating they received from CRISIL, which is a major rating agency, so it's on their radar.
And they're hiring to support all this growth.
Seems so. Their employee count grew by 20% year on year. They're now at about 13,540 employees. That's a significant workforce expansion.
Okay. One last crucial check. Check the auditors. What do they say about these financial results?
The auditors, Singhi & Co., gave an unmodified opinion on both the consolidated and standalone financials.
Which basically means?
It's a clean opinion. They believe the accounts give a true and fair view of MOFSL's financial position and performance. No major red flags raised in the audit report.
Okay, great. So let's try and wrap this all up. After digging through all this, what's the main takeaway from MOFSL's FY25 performance?
I think the key point is just strong, broad-based growth. They delivered really solid financial results, hitting that big Euros 2,000 crore operating PT milestone. Growth was evident across most segments, especially wealth and asset management.
And this performance seems supported by both their strategic actions and, well, a pretty favorable market backdrop in India.
Exactly. It's a combination of internal execution and external tailwinds.
You really can't overlook that incredible client growth and the huge AUA figure either. It shows serious momentum. So maybe a final thought for you, the listener, to consider.
Yeah.
Given this massive expansion in their client base, their reach, and the assets they handle, how well-positioned do you think MOFSL really is to capture the expected boom in India's wealth sector over the next few years?
That's the million-dollar question, or maybe the trillion-rupee question. It's definitely something to think about. You might want to dive deeper into specific segments we discussed, track how their digital plans unfold, or watch what they do with that potential NCD capital raise.
Lots to keep an eye on. That brings us to the end of this deep dive. Thanks for joining us.